Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's June 3rd. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. Hope nobody's listening to this right now. Just getting ready for the 4th of July, one of my favorite holidays, which I broke down a lot of times with my family, going upstate, and fireworks and stuff. Hopefully most of you are not traveling because, man, I have no idea what was going on last week. But traveling was a disaster. I mean, not just with me, but a lot of my friends, colleagues, I was telling the story. They just had trouble getting out of airports last weekend. And for me, I was in New York for business and a little bit of pleasure since I played in a charity golf tournament. Just memorial for a good friend that passed away around 7 years ago that I play in every year, and definitely got some business done and some meetings. But the flight going to New York was okay from Jacksonville, but JFK coming back here, I mean, I really felt like I was in a twilight zone. My plane was supposed to leave originally 9 p.m. on Saturday. I specifically made the flight for Saturday night because who travels on Saturday, right? Figured it'd be better than coming home, New York City, and on Sunday. So it's Saturday night, not too many people travel. Yeah, I travel all the time, and usually when I travel on Saturday nights, you don't see a ton of traffic. So first, I'm pulling up to the JFK jet terminal, right? It was nice enough to have someone from the rent-a-car that I dropped off drive me up there. And as you know, most terminals are crowded when you get there. There's a bunch of cars there. You got to go around them and, to drop somebody off. This was different. The ramp leading up to the platform was completely jammed. It took me 15 minutes just to get to that crowded area to the actual terminal where I can get dropped off. Then once I got there, it was insane. At first, the terminal inside, nothing was working. The computers were working. So the only way you could check in, right, if you had luggage, is by doing it outside. And JetBlue had nobody around. Nobody around that you could ask, nothing. It was like you going to the track in Kentucky Derby. That's how crowded it was. It was insane on Saturday night, right? So you had to check in your bags outside. The line to check in your bag outside was at least 150 deep. And I'm not talking about 1, 2. Some of these people were flying international. I had 10 bags. Of course, it was like 90 degrees outside. So, thank God I got there 2 hours early. And I'm waiting an hour to check in my bags, right? And I get up to the counter, and there's 2 ladies in line. They were there for a very long time. They have 8 bags of luggage. Out of the 8, 5 were overweight. So that means instead of paying $35 or whatever, it's going to be $60, probably more than that, something like that. So they literally open up every one of their bags, clothes all over the place, shifting things back and forth, right? This way they could lower the weight so they didn't have to pay it. Took up at least an hour for that one spot. And it was 3 spots, 3 people, right? 3 people working there to help check in people for your luggage. So when I finally get up to the window, some guy barely speaks English, right? He comes in, he's like, question. And as he's asking a question, he's like, can I ask you a question? And I'm like, no. You know what I'm saying? It took me an hour to get here, buddy. Listen, get online. I'm only going to be 5 minutes, please. And again, he really didn't speak English. He just completely ignored me. And he decides to shoot out that question and ask it anyway, right? Even though I'm like, can I just get this done really quick? I've been waiting online for an hour. So the question he asked the guy, is this a JetBlue terminal? And I actually turned to him. I'm like, you're kidding me. Like, he probably didn't understand anything. I was like, is that really the question that you were dying to ask? I mean, the entire terminal is JetBlue. It's written in letters pretty much the same size that you would find in a stadium, right in front of the terminal. I mean, a better question would have probably been, is this the airport? That would have been a much better question. I kind of feel bad for what these people have to deal with, because it's crowds, people are pissed off. But really, that was the question that you asked. Like I said, it's like a Twilight Zone. Then I'm trying to rush since it's getting close to boarding. And I decided to upgrade my seat to more legroom. And it wasn't a legroom I needed, but by paying, it was only $35. It allowed me to fast track through the security gate. Basically needed to do this because there were hundreds and hundreds of people in line and it wasn't moving. So I was able to cut about 75% of the people, right? And they pushed us into a line. And then the line I was on separated into 2 different lines. which I thought was great because now we have two people checking the IDs and everything, and your boarding pass, and we'll get right through security and it'll be fine. Absolutely not. One line, of course, the line I wasn't on, the guy was checking IDs and boarding passes really super fast, checking like 2-3 people at a time, going in, okay, you're good. Well, every like 5 seconds, okay, you're good. The line that I was on, and for me to actually mention this, that's how slow he was. I mean, he was checking IDs and passports pretty much as slow as you possibly can. I mean, he was writing all over the boarding passes, writing like a little note, putting your license in the machine twice to make sure it's real, or, looking at the IDs, looking at your face and looking at the license, looking at your face, look at like 3 times. And it's painfully slow. And now we have probably about 50 people who are on lane 1, just got ahead of me to go through security. So I'm getting a little nervous, like 30 minutes before my flight leaves. But, hey, this gets even better. I get inside the terminal. I'm rushing because they already started boarding. At least that's what I thought. But then I get a text to the terminal and says the flight's delayed for an hour from 9 to 10 p.m. So I really wasn't too upset because, hey, I can grab a bite to eat. I was rushing. I'm a little sweaty here. I said, hey, I can relax a little bit. So I relax. 9:30 rolls around. It's boarding time. And there's tons of people standing right in front of the line for the terminal. And the terminal right across from us is also boarding, and it's delayed. So there's people everywhere. You almost can't get down the aisle to get to the rest of the terminals. That's how many people were there, right? But specifically for us, we had people right in front of the terminal, right in front. So they're calling people. They're like, okay, Group A, and I was Group A after I upgraded, right? So I'm trying to get in. And as I'm trying to get in, I'm asking these people, and again, these about 10 people didn't speak English, and I see one of their boarding passes, and it's like Group D or E. So it's like 20 minutes before you're going to get on, 20 minutes before you're going to get on. So she calls, and I'm like, okay, could you move? Nobody could get on. And then right before we're about to get on, she makes an announcement. By the way, the girl was making announcements. It was like, okay. It was very, like she was whispering. Nobody could hear. But they were like, oh, well, the full flight crew isn't here yet, so we're going to have to wait a little while. So they announce boarding, and they say, wait, not yet, right? So forget about the people standing in front who are boarding the plane last that are just blocking it, the terminal. That's how crazy it was. But now we have to wait for another person for the crew to come in, and we finally see someone come, and they're walking, laughing like it's, they got a million things to do, and all these people are waiting. So finally I board the plane, right? And everyone's now coming onto the plane. And again, when I board the plane, Group A, so I'm one of the first people. So this lady with young boys, 2 young kids, boards after me. And I'm in row 12, and she's about 50 people board the plane, hardly anyone's on it. She comes down the aisle to row 13 and puts the carry-on bags up into the baggage space in row 13. So one of the kids goes, Mom, we're sitting in row 5. Why did you put your luggage there? And she was like, oh, my God, there's no way she can get back to the front of the plane. Everybody's loading back on the plane. So she's got these 2 kids forced in one aisle. She's like sitting on my lap as people are coming in because she can't get to the front of the plane. And she didn't put the luggage in the back because, all the spots were taken in row 5, 6, 7. No, she just had no idea. I have no idea what she was thinking of going to the back of the plane or in the mid part of the plane and putting the baggage there and thinking she's going to be able to get it. So she had to wait till everybody to board before she can go back to her seat. So I have, basically this lady just almost sitting on my lap, waiting for everybody to come in before she can get to the front of the plane. Finally, everybody boards. We pull away from the terminal and we're on a runway for about 90 minutes, right? So it's midnight now. There's like 20, 30 planes on the runway ahead of us. Everywhere we turn, there's just planes everywhere, right? That's why I laugh when so many people say, the economy's bad, it's weakening. I had to wait 30 minutes to get a slice of pizza that I was going to pay $6 for, okay? The economy's fine. Believe me, I travel everywhere. It's not bad. So we finally take off. I wind up landing at 2:30 a.m. This is Saturday, right now into Sunday. And I get in my car. I have a parking ticket. I go to the automated lane, and now the credit card machine doesn't work. So I have to wait 10 minutes, 2:30 in the morning, before someone comes to help me. So this girl comes over, and I'm like, these are like new systems. Why'd you get rid of the old ones? I've been coming here for 8 years. It worked perfectly. She was like, well, they're too old. We couldn't update them. And I'm like, yeah, but they worked. Isn't that better than upgrading to a system that doesn't work? You have to feel, I felt bad getting on her a little bit, but you have to realize it's been a tough day. So I wound up getting home at 3:30. Now, look, you know me. At least a lot of you have been listening to this podcast for a while. I'm an optimist. I love people. I'm a pretty easygoing, generally happy guy. But almost every one of these problems were caused by stupid people. Either they're stupid or just complete inconsiderate. I'm not knowing the weight on 5 of your bags of luggage, which held up the line for hundreds of people. People not having their ID ready to check in, their bags outside. I mean, the guy had to walk down. It took him 5 minutes to go down that line in front of JetBlue that we were all standing on and come back and say, could you please have your IDs out? This way you're ready to check in. So people would get there and then they wouldn't find their ID for a couple minutes and with all these people online. I mean, nobody helping out in the JetBlue terminal. I mean, no workers anywhere. Just to say, hey, guys, we're having computer problems. Please go out. I went inside the terminal first, and by the time I got outside, there's probably another 25 people online. The lady storing her bags in the back of the plane when she's sitting in the front. The people blocking the gate to get on the plane. I mean, just a complete hot mess. So the point of this long, aggravating, and I love venting. I love venting on this podcast, right? Just helps me out tremendously. It's like therapy, I always say. But I just hope and pray that if you're traveling, you don't experience any of this, but you may, because 4th of July is one of the most high traffic days, travel days. So good luck if you're traveling, because I know when you have a time like I have, at least I can vent on the podcast. Everybody listens and says, holy cow, this is crazy. But when you walk into, to see your family or family members you haven't seen in a while after you have a trip like that, it's stressful. Again, it's not going to be fun. It's not going to be happy. And most of the stuff that happened to me could simply been avoided if people were just a little smarter. I'm not talking about you have to be brilliant. Just, don't be so stupid, and things would have moved along a lot easier. Anyway, I have a great podcast for you today, starting with an interview from an old-time guest who is Amir Adnani, the chairman of GoldMining and CEO and president of UEC, which is great because we're going to get a scoop on gold and also uranium. For gold, we're seeing prices move higher. Is this just temporary, or has, the cycle finally turned after one of the most bearish cycles in the commodity in 3 to 4 decades? It's going to answer that. Also about uranium, a lot of institutional money flowing into the sector, mostly for long-term. Fundamentals are great, which Amir is going to talk about. But more important, guys, within the next 2 weeks, Trump's supposed to give his decision on a major petition that's out there that could change the landscape for domestic producers like UEC. So Amir's going to tell you what that petition is. Some of you know it's called 232, Section 232, and what he believes is going to be the president's response. You don't need to go through Congress. The president could just sign it. He could say what it is, how it's going to impact the company, and say, will it get delayed? Will it not? So you're going to talk to an insider in this industry, going to give you a scoop on this, and this is supposed to happen, or he's supposed to rule on this. Donald Trump's supposed to rule on this measure by July 15th, which is less than 2 weeks away. So it's a very, very big deal. A lot of people in the uranium space are on the sidelines. Let's hear what Amir has to say about it. And you know what? We're going to get to that interview right now, but quick disclosure, Amir's in another country. We're doing this interview, so it's a little choppy at some point. You're going to be able to hear the whole interview. But again, I really appreciate he's doing it from another country. A lot of guys that I talk to are in the field. They're doing work, and that's Amir. And here's that interview right now. Amir Adnani, thanks so much for joining us again on the podcast.
Frank, great to reconnect with you. So much going on the topics that you and I care about. And can't believe we've waited this long to reconnect. But I guess it gives us more to cover.
No, absolutely. So I'm going to bring everyone in here in case you don't know. Amir's a good friend of mine, chairman of GoldMining and also the CEO and president of UEC. That makes you an expert on both gold and uranium. So, and I know you're humble when I say that term, but you're involved in both of those industries. And I want to start with gold. A lot going on, right? It's from an industry that nobody cared about to everyone cares about. All of a sudden, we've seen gold breaking through the $1,400 level. What are you hearing out there? And that's, from a guy that talks to institutions and big investors, because you can see a lot of algo trading, right? And whenever we see a sector that just breaks through certain levels, a ton of money flows into these sectors right away. But what do you need to see to have a confirmation that the cycle has finally turned, or basically that, we're finally out of one of the biggest cyclical downturns this industry has seen close to, at least 3 to 4 decades?
There's so many variables here with with the move in the price of gold, and let's kind of go down the list, right? So starting out with geopolitical events, which I don't think is the main driver, but why don't we just start there, right? I think you look at the fact that the G20 meeting went well, right? There's this sort of truce being called in the trade discussions. But I think at the end of the day, if you were to kind of look at that and just practically think about it, I don't think that these trade issues have just kind of been resolved because President Trump and President Xi had a good meeting in Osaka. I mean, these are complicated issues, going to take a long time. And so it may have kind of been a nice weekend in Japan, but I think that story continues to create issues and volatility on trade. On the other side, you have the issues in the Persian Gulf, right? You have the issues with Iran. You have a whole host of kind of Middle East related factors that geopolitically, I think will continue to keep things kind of intense. And so, when you kind of look at it from those perspectives, I don't think we've come out of the woods. Then you go to the U.S. dollar. I mean, talking to some of the institutions in Asia overnight, the theme is to basically short the dollar right now. The dollar is under weakness ever since the doors were opened up by the Fed, that there might be kind of the beginning of an easing cycle taking place here. I think we may have seen peak strength in U.S. dollar. Now, look, you never want to bet against the U.S. dollar, but even the president himself, President Trump, is trying to talk down the dollar. A weaker dollar would be good for exporters. It would be good for economic activity. The Fed will see what it does, and that kind of brings me to the next point, which is, as far as gold goes, maybe it all comes down, Frank, to this next Fed meeting in July, and what they do there. Is it going to be 25 basis points, 50? I don't think it's going to be 50. Is it going to be the tone and the language? And I think that's going to be the next thing. If the horse kind of leaves the barn on this one in terms of what the Fed says, and the market believes that this is now the beginning of an easing cycle that we haven't had in a long time as far as what the Fed does, then it's going to be a race to the bottom. Because as we know, basically you look at what the ECB is doing, what the Chinese are doing. We're basically entering a whole new sort of period of the race to the bottom. So who can devalue their currency the fastest? And it's crazy to think that, right? Because you figure after almost over a decade of low interest rates, why do we need lower rates, and why do we need to keep injecting more capital into the system? I feel like there's already plenty of capital out there, right? But it's incredible to think that this is kind of where we are, and I think it's starting to then really show itself in the move that we're seeing in the price of gold. Gold is breaking out. It had a heck of a monthly close at the end of June. That was very constructive from a technical point of view. And now we come into July. I think the next event is going to be the Fed meeting.
Yeah, and you bring up some good points, because I want everyone to put their personal feelings aside of what they think of the Fed, what they're doing, lower interest rates, and maybe it's artificially propping up asset prices in the markets. You can complain of that on social media. You can hate Trump for that. You can hate current administration. But the bottom line is, when it comes to your money, it's this administration wants low interest rates, and the world wants lower interest rates. And you're looking at, which is surprising. I don't know if you know this. I tweeted about this earlier, but the overnight index swaps indicate 100% probability of a rate cut in July. 100%, right? And like you said, it's kind of surprising with all the money being injected. But look, I mean, we're looking at stocks close to all-time highs or at all-time highs. Unemployment is still strong. Our economic data, it's not terrible. I mean, it slowed down a little bit. It's not crazy, but 100% July rate cut is pretty insane if that happens, and it is going to lead to a weaker dollar. So I guess gold goes higher, which leads me to the next question, because with gold mining, and you've been accumulating ounces for over 5 years and buying projects very, very cheaply, knowing that these assets will be worth more at a future time. I'm sure none of us thought, even especially when Trump first got elected, that we would continue to have a bearish cycle for it's close to 7 years. But with gold going higher, does this change your strategy at all for gold mining? Are you still looking to acquire assets, maybe develop some of the great projects that are in your portfolio? But what's the plan right now?
Well, let's go through the sequence of steps, right? So first of all, let's starting with the gold price and the points that we just covered. This breakout on the gold price needs to sustain itself probably for, I don't know the exact time frame, Frank, but I think you would agree that just because the gold price breaks out it doesn't mean that gold stocks respond immediately. At least the ones that could respond immediately are the ones that are held predominantly in ETFs and kind of the more passive fund structures that have been created. The smaller gold companies, anything sub 1 billion market cap, is not going to immediately catch a bid, so to speak, because the capital flows aren't yet in active funds. They're really kind of initially going to hit the passive funds first, the ETF structures, et cetera. So I think it's going to take some time to see the following happen, in my opinion. And this is the kind of the main thing I want to draw your attention to, and maybe for your listeners as well, which is the gold stocks and their weighting in the S&P 500, which currently is at 1/3 of the 30-year historic average, which is quite remarkable, right? So if we come basically anywhere close to the 30-year historic average of what the gold stocks weighting is in the S&P 500, this will cause a major re-rating for those producers in terms of their multiples and what they're going to be trading at, which will then bring on which will really then shift the focus to the biggest issue facing the sector and the industry for the gold industry, which is shortage of reserves and resources. Because during this very kind of long bear market environment that we've had since 2012, the last time the gold price was kind of hovering around the current levels, the industry has had to focus on deleveraging balance sheets, reducing debt, and as a result, cutting exploration capital. Exploration capital between 2012 to 2016 was reduced from 20 billion to 8 billion. And it's taking longer all over the world to permit new mines to be built and to be brought into production. And so I think the sequence of events will be that we see a move back towards historic averages of what the weighting is for gold stocks. That causes that positive re-rating on multiples, on net asset valuation for major gold companies, which is then the number one focus will be on growth. Growth in the mining industry is how deep and how large your pipeline of resources are, basically pre-production projects. And again, that's where the industry is basically sitting at a decade low when it comes to industry-wide resources and reserves. So now you dovetail that back to what our strategy has been with our company, GoldMining, not to be confused with the industry GoldMining, but GoldMining, our company, Frank, as you know very, very well, because you've been following and tracking the company for a long time, since 2012, basically since the time we saw this drop in the gold price below 1,400, we've been hovering below 1,400 for 6.5 years. During this period, when the major gold producers were focused on deleveraging their balance sheet, cutting exploration, we have been focused on making acquisitions. And the roll-up strategy that we've had of resource stage pre-production projects throughout the Americas has been about focusing on acquisitions in countries where there's established mining industries, areas where there are companies larger than us active in exploring and developing, so we're not the Lone Ranger. This creates a perfect environment for future M&A activity. And finally, situation where in the last 6 years, you could have been buying pre-production gold assets for 10 cents on the dollar. Because again, the sector was absolutely deprived of any capital, exploration capital, development capital. Any of the funds that were set up to deploy actively managed funds into the gold industry had all their capital sucked out, so there was no money to go around. We've been fortunate, and some of our key investors and backers, people like Marin Curzio, guys like Mario Garnero, who you've met, guys like Mike Rule, who you know very well. These are people that we were able to attract a very long time ago at the beginning and inception of the company to back the company to go pursue this roll-up strategy during the bear market. I think we got lucky that we ended up with an extended bear market because it gave us a longer window, a longer time frame to be able to complete the various acquisitions that we've done. And as you point out, we've now managed to put together a portfolio in 5 different countries in the Americas, basically with total resources and this is sort of mining terminology, but measured and indicated resources of 10.5 million ounces, and another 11 million ounces of inferred resources. What that means is that these are gold resources that have been drilled out and defined independently. And if you put that into context, close to $280 million has been spent on the properties that we've acquired. And the total properties that we acquired cost us $80 million. So $80 million compared to $280 million previously spent. The value of the assets that we acquired, the market cap of these companies used to be over $800 million. Hence my comments about buying for 10 cents on the dollar, where our total acquisition cost of everything we've rolled up since 2012 is about 80 million. The historic valuation of the assets in the form of public companies is about 800 million. Fascinating stuff, especially now that we're seeing a turnaround and a breakout in the gold price.
So now that you accumulated these assets, right, it's kind of like almost like a sit and wait strategy, but you're developing these, you're reporting more news on them. But what are the catalysts here? Do we have to wait for gold to continue to go higher? Is it we want to see an increase in CapEx, more spending, or more M&A, where it's not just, we've seen M&A when it comes to the majors almost, merging with each other, but where juniors are actually getting acquired by majors, right? So, what are your next steps in terms of, and the catalyst here? Is it, hey, you know what, we have a nice portfolio, or is it still drilling down on these projects and maybe even, just developing them, or as prices go higher, and say if you don't get a bid for them, you have some amazing assets within your portfolio, right?
Well, I mean, I think to qualify the way I would describe the assets, besides, let's say, besides calling them amazing, let's kind of drill down to numbers for a second. The total size of the portfolio that we've put together in 5 very mining-friendly jurisdictions between the U.S., Canada, Brazil, Peru, and Colombia. In these 5 countries, the total size of resources that we've assembled is the largest, I repeat, largest portfolio of gold resources in the ground of any pre-production company listed in North America, listed in Canada, and we're listed on the Toronto Stock Exchange. So there's this sheer size advantage that really stands out. Size matters in mining. Size especially matters because bigger companies, bigger gold producers look for sizable deposits to develop. And so when you look at the portfolio of resources that we have, biggest of its kind in a portfolio of assets, notice you don't have all your eggs in one basket. We're not just in one project or one country or one state or province. So that says a lot, and that really kind of sets the company apart, Frank, in terms of being a very exciting candidate in any kind of broader M&A that takes place in the gold industry. However, between now and then, we're keeping the company in a financially nimble position, making sure cash on hand can last at least multiple years so that the company doesn't need to dilute equity holders while we have this buy and hold strategy. That's been key. The last time we raised money was in 2016. Here we are, 2019, and we still have enough cash on hand for the next couple of years. That's quite remarkable when you consider how often pre-production, pre-revenue gold companies, resource companies have, need to come back to market to raise capital. We've really avoided that, and the fact that again we last raised money in 2016, I think really speaks to how conservative we run the company and its cost structures. I think you can look at us also as an interesting way to get exposure to junior gold companies or junior gold assets through an ETF approach. And what do I mean by that? Historically, Frank, you would buy the GDXJ being the junior gold ETF. And that's a product that completely got remade and reshaped a couple of years ago when they had to move up the kind of market cap spectrum and invest more in billion-dollar plus market cap companies. Well, that's not really a junior gold ETF anymore. When you consider the fact that we've put together so many companies and assets inside one company with our business, we in essence have become sort of like a junior gold ETF. Our cost structures are very low. While we hold these assets, we're actually adding value to them because we have a team of experts who are involved in remodeling or advancing the geological understanding around these assets, doing permitting work. So it's not a true buy and hold. If you buy, you reduce the cost structures, you eliminate unnecessary costs, and you focus on how, through low-cost activity, you can actually de-risk and advance these properties. So, and when you kind of look at it, I think it's already attracting
submissions from industry players. We have at least 2 mid-sized gold producers who are shareholders of the company. When you look at our shareholder rosters today, we have a number of institutional investors that are new to the company as shareholders, who I think kind of view and in a way provide that endorsement we've been looking for, that says, this business strategy makes a lot of sense. You're not taking on a lot of operating risk. You're creating a lot of leverage on a per share basis for the investors. And the outperformance was there. In 2016, our business strategy was best reflected in the bull run that we had in gold equities in 2016, where our company was the best performing gold stock, or one of the best performing gold stocks in Canada that year. And that year, I don't even think the gold price got as high as it has reached today, north of $1,400. So I think there's a very interesting setup here. And I think when you compare our valuation today on a per resource basis to 2016, I think we're trading at maybe 1/5 valuation on a per resource basis today compared to 2016. And since 2016, we've markedly improved the quality, size, and location of our asset base through additional acquisitions we made in 2017 and 2018.
That sounds great. I mean, well positioned for the bull market in terms of the assets you have, also the amount of cash you have in the balance sheet, which is pretty remarkable because we've seen so many companies raise money over the past 3 years. And it's going to be interesting with gold prices higher to see how many companies really take advantage of the bull market to raise prices, to raise money with their prices higher. But that's great stuff there. Now, I can go on and on about gold mining, but I definitely want to talk about uranium. It's a hot topic. I'm getting lots more emails, believe it or not, about uranium. And look, after testing the $30 level, we've seen prices pull back to 24, 25 here, over the past couple months. And to put this in perspective, for people who don't know the industry that well, for uranium prices, they were over $40 in 2014 and over $140 in mid-2007, pre-Fukushima. So I'm going to ask you this, Amir. I'm hearing that prices have come down, at least in the short term, mainly because investors and companies, kind of on the sidelines right now, until they see how Trump is going to respond to a very important petition called Section 232. I guess explain briefly what Section 232 is, because the president's supposed to make a decision on this by July 15th, a couple of weeks away. And what does it mean for, UEC? Is it a big deal? Is it a game changer? Because, this is news that we could see in very, very short term.
Yeah, I mean, maybe before I get into that, I just want to say I'm kind of really fascinated by one thing, which is the number of topics and industries you cover on your show and in your newsletters and in the analytical work that you do. And as niche and perhaps obscure as the uranium market could be sometimes, because it's not something you hear Citibank or Bank of America or Merrill Lynch write about.
Yep.
This is one where I'd say you're probably one of the most knowledgeable analysts out there covering this, because you've been doing it for so many years. And I'm glad you're still covering it, because we have a heck of a development here with this report that you point out that the Department of Commerce has submitted to President Trump. This is sitting on the president's desk right now. The official timeline is to get some kind of news or decision from the White House by or before July 13th. I don't know when you're going to be publishing this podcast, but our conversation could be going out, and literally maybe this news might be on the tape already, but what the president's decision is. So it's a very interesting dynamic. And I think, I go back, Frank, to 2005, when as an entrepreneur, I became interested to form Uranium Energy Corp. And what I was drawn towards was this dependence that the United States has and had back in 2005 on foreign imports. In 2005, when I got interested in this, the U.S. was importing 10% of its uranium requirements. 90% of its requirements, 10% was being mined. And today, it's 99%. 99% of U.S. requirements are being imported. And when you look at what also grabbed the attention of the chairman of our company, Spencer Abraham, who's the former United States Energy Secretary, was the same thing. I mean, Spence wrote an op-ed that was published on Fox News and in USA Today over the last few months, where he talks about this point, where he says, when I was Energy Secretary, and this was in the Bush administration, the U.S. was importing 50% of its oil requirements. And they thought that was a national disaster. And through a combination of policy and American ingenuity and technology and financial markets, especially the U.S. capital markets, all coming together, that got resolved. That got turned around. I mean, who would have thought, in 2004 that the U.S. by 2019 or even sooner than that, be at par with Saudi Arabia when it comes to oil production. Think of the thousands of jobs that were created along the way and the kind of economic impact it had. Well, that's when the U.S. was importing 50% of its oil requirements. With uranium, it's 99% of uranium requirements being imported. And so this is probably beyond being a national disaster. It's just lunacy, frankly. And that lunacy just at a time and a day and age where you can't rely on the Russians, you can't rely on the Chinese, you can't rely on state-owned enterprises for your supply chains of anything. I mean, look at all the issues that we're dealing with right now. And it's troubling to me, and people kind of make these arguments about, well, it's free markets. I can tell you one thing. In uranium mining, it's hardly free markets when it comes to non-U.S. or non-Canadian producers. I mean, most of the world's production, majority of the world's production is by state-owned or state-sponsored or state-backed companies. Where's the free markets in that? And so the issue runs deep. It runs deep probably back to the Cold War days, and it's a bit of a complicated issue, but more importantly, if you look at the combined market cap of all U.S.-based uranium companies, including that of UEC, it's probably less than $600 million. And so that's nothing, right? When you compare that to anything you want to compare that to. I mean, the combined market cap of all publicly listed uranium companies in the world is less than maybe $8 billion. At its peak in 2007, it was $120 billion. But if we just focus on the U.S., because that's the impact a potential decision by President Trump would have, is that if the president says, look, to import 99% of our uranium is lunacy, it's a national security issue, we need policy that helps support the development of a healthy and vibrant domestic uranium mining industry in the U.S., I think, and I don't know if you would agree with that, Frank, or not, I think that would be very good for those small little subsector companies that UEC is the biggest of by market cap.
Yeah, I mean,
market cap of $600 million. I mean, I think that would be very good for the U.S. industry, and it could create a new bull market in this very niche industry.
And with this petition, right? So they have to show that it's a threat to national security, right? For Trump, Trump doesn't need Congress, right? He just needs his signature. If he comes out and says it, boom. What is it? 25% of uranium has to be produced here, or it's going to be subsidized. So, and correct me if I'm wrong on that, but all you need is really his signature. But it has to be proof of national security. Now, maybe people don't think that, or they don't. It says, maybe not for uranium is a threat, but you have to realize that we saw the same thing with steel when China was dumping cheap steel onto our markets, right? Where they consider that a threat to national security. I mean, we've seen tariffs, being placed on different things outside of what we're doing with China right now, right? This is before everything really went crazy. But the fact that if we're doing this for different commodities, it makes sense that this, and I'm looking at it from not like, totally being objective. I don't care if you're for this or against this, but I'm saying from a money-making opportunity, which way would you kind of lean? Because, and I know it's a tough question, and everybody I talk to who's in this industry, who's involved, they're really like 50-50. Like they really have no idea or leaning each way of how the president's going to react. And a lot of them are surprised that the president hasn't reacted yet.
First of all, as we both have seen, the president has a lot on his plate. So I think we're talking about a very active administration with a lot going on, and a lot going on, obviously, on this Chinese file, which is ongoing, and it's been complicated. But let's just come back to uranium for a second. There's really two important, and really the only two applications or sources of demand for uranium in the U.S. are for power generation and to power the nuclear navy. All the aircraft carriers and submarines run on nuclear power. You need uranium for that. when there's trouble in the Persian Gulf and the USS Abraham Lincoln needs to be dispatched and go over there, this requires nuclear power. This requires uranium. 98 reactors are operating in the U.S., generating electricity, emission-free electricity. They need uranium year in and year out. The United States is the largest consumer of uranium for power generation, for powering the world's biggest navy. And you're telling me for all of that and for those two key applications, it's all right to be importing 99% of the uranium from foreign sources, majority of which from Russia or former Soviet Union states like Kazakhstan and Uzbekistan? That doesn't add up. And that 99% I'm talking about is only for reactor use. We're not even talking about what the Department of Defense needs for the nuclear navy. And that is something that they must use by law, only U.S. origin uranium. They can't put Russian origin or even Canadian origin uranium into submarines and aircraft carriers. And so ultimately, I would say this, of all the Section 232 investigations that this administration has launched over the last 2 years, I don't think there's a case as compelling as the case with uranium and the dependency on foreign imports. The steel and aluminum case, the auto case with Europe, none of them involve a situation where there's this 99% import problem, this 99% overdependency. None of the other cases are this severe. This is the most severe case. This is the most severe case that really has, when you're talking about energy and defense, you're truly talking about national security vulnerabilities. I think this is a very compelling and strong case, Frank. And I think ultimately there's any argument, two sides to a debate. And the debate on the other side of it, in case you're wondering or listeners are wondering, who's on the other side of it? Who doesn't want this to happen? Well, it's the U.S. utilities. U.S. utilities, and rightfully so, because they're accountable to their customers. They don't want to see their costs go up, right? They don't want to see anything that potentially has an impact to the bottom line for the ratepayer. Well, if you're a ratepayer, and anyone that uses any kind of electricity would be a ratepayer, the thing you got to know is that if the uranium price doubled for the portion that we're talking about for U.S. demand, the difference it makes on a $110 electricity bill would be 10 cents. So you as a ratepayer would see an insignificant increase in your monthly electricity bill if there was a doubling of the uranium price. Okay, but at the end of the day, the utility lobby is strong, and they may have when they make up their mind and say we don't want to pay more, they lobby for that. And so the other side of the argument is that the president will be sitting there, and he will have the Department of Commerce, whose recommendation was reported by Bloomberg just last week. Bloomberg reported that Commerce is recommending to the president to take action, that they're recommending quotas, which means they're saying certain percentage of U.S. demand should be met from U.S. production. That's what Commerce is recommending. That's what Bloomberg has reported. Now, there'll be other points of view that the president has to take into account as well. But let's not forget the impact of the workforce, Frank, jobs. There used to be a workforce in the U.S. that was comprised of over 20,000, close to 30,000 people working in the U.S. exploration and mining for uranium, which isn't just jobs, it's also expertise. That workforce had the expertise that's now dwindled down to less than 400 people. That's on its way to probably zero. And so the other thing you have to tactically think about is, do we ever want to lose the entire workforce and knowledge base that makes up the supply chain and the raw material of vital commodities? Do you want to just let it go to zero? And so again, I think this is a situation that should resonate with President Trump. I think should resonate with the cabinet, with defense, with Commerce. Obviously, we know it's resonated with Commerce. They're the ones that led a 270-day investigation into this. Companies like ours, Uranium Energy, is one of a handful of licensed producers of uranium in the U.S. And licensing is the barrier to entry for uranium mining. It takes 7 to 10 years to get licenses to be able to develop and process uranium. And so I think the level of engagement that we've had here as well has been, we've had very direct conversations with folks, basically from Department of Energy to Department of Commerce. And I can tell you, Frank, I think the key point here has been and the key question we've been asked as industry and UEC as a licensed producer is, can the industry ramp up? Can the industry get back and be competitive and meet the demands that quotas would set? And the answer is absolutely yes. And in fact, I believe we not only can meet the quotas, I think this can become a world-class industry in the U.S. It's been so overlooked and it's been so underfunded and undercapitalized for decades. And I think there's something really exciting here. I think it's a really exciting possibility that starts with this decision from President Trump by or before July 13th. In fact, maybe there's a delay or extension in the decision. I have no idea. And as you and I know, with the White House, we can't perfectly predict things. But we should see or hear some decision, and it could potentially be the beginning of something that ushers in a whole new era of growth and development, this new industry that's got a lot of history, but in a way kind of becomes a new chapter for the U.S. uranium mining industry, full of growth, full of potential, and some really exciting potential.
Now, interesting enough, being tapped into institutions at the institutional level, a lot of people I talk to are actually investing in this sector. I mean, some of them for the first time ever, a lot of them for the first time in over a decade. And I have to tell you, most of them don't really care about Section 232 or how it's going to turn out or anything short-term related. They're investing simply because they're looking at the fundamentals of extreme low supply and an increase in demand that is eventually going to result in much higher prices, right? Like I said, a lot of these investors don't really care about the short term. They just believe uranium prices and many uranium stocks are going to surge maybe over the next, 3 to 5 years, and they're positioning themselves. Could you talk about the fundamentals of the industry? Because I feel like being lost in a Section 232 in this industry, it's really forced prices to come down. People will be in the sidelines. But yet, if you're just looking at the macro picture, the whole picture of this, I mean, the fundamentals are screaming right now that prices are going to surge no matter which way you look at it or how you analyze it. Could you talk about that part of it? Because I think people are getting lost that, hey, it's all about Section 232 when it's really not. It's even a much bigger story than that.
Well, when you and I first started talking about uranium, which was many years ago, it was obviously before Trump. It was before 232. Frankly, it was before a lot of this kind of new interest that we're seeing in uranium, maybe because of Section 232 over the last year. But if you go back longer term, before, prior to all of this, the bigger trend here is really about the fact that there's population growth. We're basically going from over 7 billion to 9 billion over the next 20 years worldwide population. That requires an energy mix that is more and more in line with climate change issues and reducing basically carbon emissions. And so there's been this tremendous turnaround in attitude towards supporting nuclear power from climate organizations, climate scientists, and notable individuals like Bill Gates. Bill Gates is putting a tremendous amount of his own money and voice and support. There isn't a week that goes by where he's not tweeting about nuclear power and how it will save the planet due to the very unique characteristics of being able to generate large-scale electricity without carbon emissions. That's something that renewables are still not able to manage, is that large-scale capability in terms of large-scale electricity output, and also in a 24/7 manner, right? So I think the capacity factor on solar and renewable last time I checked was about 30%. So it works 30% of the time, whereas nuclear power is 95% and works 95% of the time. These are big differences. So what we're seeing is in 2019 and in 2018, it happened that worldwide nuclear energy generation went back to levels higher than pre-Fukushima, the levels we last saw in 2011. Worldwide demand for uranium is increasing as a result of over 50 reactors being under construction, a couple of hundred more planned or proposed. And finally, because of the long period of the downturn in uranium prices, we've had a lot of mine closures and a lot of basically supply reduction, which helps kind of rebalance the market from a supply-demand point of view for uranium. But again, coming back to demand for uranium is really nuclear power generation, which is now finally getting back to a point after a long 8-year period since Fukushima happened, We're seeing the industry get back in a groove. This is a growth industry. And we're seeing, again, best growth in nuclear power in 25 years. We're seeing in the last few years in terms of reactors being connected to the grid, in terms of reactors under construction. A lot of the growth is coming from the biggest cities and countries of Asia, where pollution is a huge issue. So going back to emission-free electricity generation. And so all of that, you're absolutely right, Frank. We can't lose sight of that. This isn't just the U.S. market. The U.S. market is an important market because it's the biggest market for uranium demand. And what the president does will definitely have, certain, it will kind of reverberate through the industry and the global supply chain. But it is a global business that's going through tremendous, some of its best growth in the last 25 years, as I mentioned. And all of that we can't lose sight of, because I think this uncertainty around what Trump is going to do has definitely kind of created a bit of a cloud over the industry. It's going to put a bit of a wet blanket around the industry. So once you remove that uncertainty, regardless of which way he decides to go, that should be very positive for an industry that is growing. Supply-demand fundamentals look much better because demand is rising. Supply has been declining because of the mine shutdowns. And this very kind of low uranium price that no company can really make money at. The world's biggest producers are cutting down production and citing the low price as the reason for that. And that always is a good signal that you've hit bottom with a commodity. Anytime majority of the mines for any commodity are not losing, are not making money and they're losing money, that typically signals bottom, because you either basically have to shut down all those mines indefinitely, or the price will respond and go higher. And in this case, unless we're going to shut all the reactors in the world down, which is over 400, which isn't the case, because if we do 15% of electricity worldwide goes off, and literally so the lights go off, that's not going to happen. So the price has to have an upward correction. And I think we're in the early phases of seeing that.
All right. So we covered a lot here. Great stuff in uranium, great stuff on gold. I want to ask you, here's the last question here, because you recently sent me, I think it was yesterday, earlier today, about, the bookies and how they're presenting, the odds on every candidate to win the election next year. Obviously, Trump is well ahead, and everybody else is kind of like, from the Democrats are, I don't know, kind of, I wouldn't say the same, but kind of, whatever. It's not really a shot right now, which is expected, but I'm going to ask you a tough question. As a gold guy, and we recommended gold mining just before Trump got elected, and when Trump got elected, which is, kind of a surprise to most people out there. Of course, everybody said that they predicted it today, but nobody really did. Very few people. We thought it was going to be a boom to the gold industry, create uncertainty. I mean, it was a huge surprise to everybody out there when Trump got elected that it would be worse. But for gold, is it, and being a gold guy, right, for gold mining, do you want to see Trump lose because maybe it's better under Democratic, for gold? But yet when you're looking at uranium, it's clear that it's probably positive under Trump, no matter how he votes on 232. But is it kind of conflicting with you? Because I think win or lose is going to be good or bad for any company. Do you look at that at all? Or is it kind of like, is it going to change your strategy? Because, a lot has changed in the gold industry since Trump got elected.
No, I really think these are bigger term trends, honestly, than President Trump and his reelection. And I'll tell you why. We're seeing for the first time bipartisan support for nuclear energy in America, in D.C., on Capitol Hill. Frank, earlier this year, there was basically a new bill signed by President Trump that had bipartisan support called the Nuclear Energy Innovation and Modernization Act. By the way, it got zero press because I guess the press doesn't want to cover things where there's bipartisan support and there isn't any bickering. But the one thing that the left and the right agrees on, even AOC, when she came out and initially in her definition of the Green New Deal had excluded nuclear energy, I think they quickly edited and took that out, meaning they didn't take a position against nuclear power. You're seeing, again, very important climate organizations and groups that were previously against nuclear energy, the Natural Resource Defense Council, the Union of Concerned Scientists, Sierra Club, are now coming around and realizing that without nuclear in the mix, we cannot reach the bigger objectives around reducing global temperatures, dealing with climate issues. So I really think there's bipartisan support there, and I believe there's growing bipartisan support there. And that goes beyond the re-election and Trump and all of that. The biggest thing I think with the U.S. dollar and the issues around gold is really, I want to draw your attention to a couple of interesting things. Just last week, there was a 100-year bond that the country or government of Austria offered. 100-year bond yielding 1.2%. I mean, talk about economic lunacy. Now, on top of that, the market value of bonds trading negative yields, okay, which also was once thought to be economic lunacy, has hit a new record of 12.5 trillion, surpassing whatever the last peak was. With that, those are not two-year trends in terms of, I think, where worldwide debt is heading, these low rates that are going to be here with us for longer term. I think all of this is bad for fiat currency because, again, it goes back to the issue around real rates, which is, which has to be obviously your nominal rates adjusted for inflation. And despite the fact that, there's this theme that, no, there is no inflation, the reality is there is a growing amount of negative yielding bonds out there, record levels. And any kind of Fed easing isn't going to change that the other way. It's only going to increase that. And I think ultimately negative real rates are going to be the key underpinning for the next big upward move in the gold price. And I don't think that's a Trump issue. I don't think that's a right or left issue. I think those numbers and those trends are way bigger than anyone that occupies the White House. And that's why I think we're beginning to see this, this breakout in gold, which really sets the stage for the next major rally.
That was such a politically correct answer. You were like Switzerland on that answer. I was expecting, obviously I wasn't expecting you to be like, no, Trump wins. I want Trump to win. You're not allowed to say who you like in presidential candidates in the public anymore because you lose like half your audience all the time. But that was a very politically correct answer. And it made a lot of sense too. I hear exactly what you're saying. The negative real interest rates. And we're seeing, guys, look, the dollar is coming down. Definitely good for gold. And interesting to see what's going to happen with uranium with 232 coming up. So I'm going to see you in a couple weeks at Freedom Fest, guys. That's in Vegas. Amir's going to be speaking there. I'm going to be speaking there. So if you guys want to attend, just send me an email at frank@curzioresearch.com. But Amir, thanks so much for coming on the podcast. And we really covered a lot. You're always able to educate my listeners. I know they love you, and I really appreciate it, man. Hopefully, we'll get you on really soon.
Thanks, Frank. Really appreciate it. And always great to be with you on your podcast. And I'll see you soon.
Thanks, buddy. Okay, guys, great stuff from Amir. I always say this podcast is about you, not about me. So let me know what you thought of frank@curzioresearch.com. That's frank@curzioresearch.com. But love that he breaks down things. He doesn't just talk about like Section 232 or even the fundamentals of gold without explaining and putting explanations behind it. This way you get everybody involved, even if you're a new investor or you're experienced investor. So I always love interviewing Amir. He's really great doing that. He's also a good friend. So again, let me know what you thought about that interview at frank@curzioresearch.com. So, guys, thanks so much for listening. Next week, we'll return to an educational segment. Wanted to keep it a little short with the holiday. Again, hopefully none of you are listening to this. If you are, maybe you listen to it on a plane or you're driving to wherever you are. Safe travels. I'm really praying that you don't have the experience I just had. It was really, really crazy last week, and it is draining. It is going to be busy out there. But remember, it's family time. You're going to have a lot of fun. Don't talk politics. Drink beer. Have a great, great time. Thanks so much for listening. And I'll see you guys in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.